Cryptocurrency is known for wild price swings. But today, September 8, 2025, Bitcoin is unusually calm, hovering just above $111,000. This stability is striking, especially as the U.S. Federal Reserve is expected to cut interest rates soon, a move that usually boosts risk assets like Bitcoin. Traditional markets are reacting, but Bitcoin remains steady, raising questions for investors. Why isn't Bitcoin surging on news that once sent it soaring? Is this a sign of maturity, or just a pause before the next big move? We'll explore Bitcoin's recent price history, the Fed's influence, and how corporate adoption is shaping the market. By examining altcoins and market psychology, we'll uncover what this calm might mean for the future of crypto. Let's break down the forces at play and see what could be next for Bitcoin and the broader digital asset world. To understand today's calm, let's rewind to Bitcoin's recent wild ride. In mid-August, Bitcoin hit a new all-time high above $124,000, fueled by optimism and institutional adoption. But the rally was short-lived. Bitcoin quickly dropped over 6%, erasing those gains and settling near $110,000. This sharp correction left many investors cautious, with some waiting to recover losses and others cashing out profits. The result? A delicate balance between buyers and sellers, leading to the current sideways movement. This pause is a collective breath, as the market digests recent volatility and waits for a new catalyst. Bitcoin's journey from $124,000 to $111,000 in weeks is a reminder of its inherent volatility. Even as it matures, Bitcoin's path is still marked by dramatic peaks and troughs. Today's stability isn't inactivity, it's the market reassessing before its next move. The Federal Reserve's decisions ripple through global markets, and its upcoming meeting is in sharp focus. The Fed is expected to cut interest rates, making borrowing cheaper and often boosting risk assets like stocks and crypto. Lower rates usually push investors toward higher return assets, including Bitcoin. This time, though, Bitcoin isn't reacting as expected. The market is anticipating at least a 0.25% rate cut, possibly more, based on recent economic data. Historically, such moves have been bullish for Bitcoin, seen as a hedge against currency debasement. Yet, Bitcoin's price remains steady, defying conventional wisdom. This suggests other forces are at work, making the current situation more complex than past cycles. Understanding this disconnect is key to navigating today's crypto market. The latest U.S. jobs report painted a concerning picture for the economy, revealing not only a rise in unemployment, but also a slowdown in the creation of new jobs. This data sent ripples through financial markets, as investors and analysts tried to interpret what it might mean for the months ahead. For markets, bad economic news can sometimes be interpreted as good news. When the economy shows signs of weakness, investors often anticipate that the Federal Reserve will step in to support growth by cutting interest rates. Lower rates can make borrowing cheaper, encouraging businesses to invest and consumers to spend. As a result, stocks rallied on the expectation of future rate cuts. Investors bet that lower borrowing costs would boost corporate profits and drive share prices higher, fueling optimism across Wall Street. Gold also climbed, as investors sought a safe haven amid economic uncertainty. The precious metal is often seen as a store of value when traditional assets seem risky. Additionally, gold acts as a hedge against currency devaluation, protecting wealth when the value of money is in question. But in contrast, Bitcoin and other major cryptocurrencies barely moved, leaving many market watchers scratching their heads. Despite their reputation as risk assets, crypto prices remained surprisingly stable. If assets like stocks benefit from the prospect of rate cuts, why is the crypto market so quiet? This unexpected calm has sparked debate among investors and analysts alike. The divergence highlights that cryptocurrencies are driven by their own unique set of factors, such as technological developments, regulatory news, and investor sentiment, rather than just traditional macroeconomic signals. The contrast between stocks, gold, and Bitcoin shows how each market responds differently to the same economic news, reflecting their distinct roles and investor bases. Crypto's muted reaction suggests a more complex interplay of factors at work, including global adoption trends, regulatory uncertainty, and evolving market structures. Ultimately, it's a reminder that digital assets don't always follow the script of traditional finance, and understanding their behavior requires looking beyond the headlines. Bitcoin's lack of response to the Fed's expected rate cut is a break from its usual pattern. In the past, even rumors of a rate cut would send Bitcoin's price swinging wildly as traders rushed to reposition. But this time, the market's reaction has been surprisingly muted, leaving many investors puzzled. Several factors explain this calm, and together they paint a picture of a market in transition, one that's learning to look beyond the headlines and short-term noise. First, Bitcoin just saw a sharp drop, so the market is consolidating and cautious. After such a significant move, traders often step back, reassess their positions, and wait for new signals before jumping back in. This period of consolidation is common after volatility spikes. Second, investors are waiting for key inflation data, numbers that could change the Fed's plans. The Consumer Price Index and Producer Price Index reports are just around the corner, and these figures could shift the entire economic outlook. If inflation stays high, the Fed might delay or soften rate cuts, which could hurt risk assets. This uncertainty is making investors hesitant to make bold moves, especially in assets as volatile as Bitcoin. This uncertainty keeps big investors on the sidelines, contributing to low volatility. Many institutional players prefer to wait for clear signals before deploying large amounts of capital, especially when the macroeconomic environment is so unpredictable. The market is essentially paused, waiting for more clarity before making big moves. Traders and investors alike are holding back, watching for the next catalyst that could break the stalemate. Another factor: the crypto market is maturing, with more institutional players who may have already priced in a rate cut. These sophisticated investors tend to anticipate policy changes and adjust their strategies well in advance, reducing the impact of the actual announcement. The event is so widely expected that it no longer sparks a sudden rally. Instead, the market is showing signs of patience, waiting for something truly unexpected to move the needle. Instead, the market is waiting for real action, or a surprise catalyst. It could be a sudden shift in inflation, a geopolitical event, or a new regulatory development that finally jolts prices. This new maturity means Bitcoin isn't just reacting to headlines anymore. The days of knee-jerk rallies or crashes on every Fed announcement may be fading. It's a sign of a more sophisticated, forward-looking market, one that's learning to weigh the bigger picture, and not just the news of the day. Amid the market's pause, Metaplanet Inc., a Japanese hotelier, made headlines by buying 136 more Bitcoin for its treasury, worth $15.2 million. This brings their total holdings to over 20,000 BTC, making them one of the largest corporate holders globally. Metaplanet's strategy: adopt a Bitcoin standard, betting on Bitcoin as a better long-term reserve than cash. Each corporate purchase like this signals growing confidence in Bitcoin's legitimacy as a store of value. These moves can inspire other companies and create steady buying pressure in the market. Corporate adoption is shifting Bitcoin from a speculative asset to a serious treasury tool. Metaplanet's conviction, even during market calm, shows a long-term outlook that goes beyond short-term price swings. This trend provides underlying support for Bitcoin, even when the market seems quiet. Despite Metaplanet's bold Bitcoin bet, its stock price dropped after the announcement. Investors worry about the risks. Tying a company's fate to a volatile asset like Bitcoin can be unsettling. Traditional shareholders may see this as a gamble, fearing big losses if Bitcoin falls. Some investors prefer to buy Bitcoin directly, rather than through a company with unrelated business risks. This can lead to the stock trading at a discount to its Bitcoin holdings. The volatility seen in Metaplanet's stock mirrors what's happened with other Bitcoin-heavy companies like MicroStrategy. It's a reminder: corporate adoption is bullish for Bitcoin, but risky for the companies themselves. While Bitcoin is flat, the altcoin market is showing modest gains and some surprises. Ethereum edged up 0.4%, trading near $4,300, showing resilience after its own recent highs. XRP, Solana, and Cardano all posted gains, while Polygon dipped slightly. Dogecoin jumped over 7%, proving that hype and community still drive some corners of crypto. Even politically themed tokens like Dollar Trump saw small increases. The mixed performance highlights the diversity and speculative nature of the altcoin world. Gains in major platforms suggest ongoing belief in crypto's long-term potential. The altcoin markets drift upward, while Bitcoin is steady, hints at capital rotating into higher growth bets. What does all this mean for investors? In today's rapidly evolving crypto landscape, understanding the bigger picture is more important than ever. The market is no longer driven by hype alone. Investors need to be strategic, informed, and adaptable to succeed. First, Bitcoin's price is shaped by both its own market dynamics and broader economic forces. Global events, regulatory changes, and shifts in investor sentiment all play a role in how Bitcoin and other cryptocurrencies move. Its muted reaction to rate cut expectations signals a maturing market that waits for confirmation, not just headlines. This means investors should be cautious about reacting to news without deeper analysis. Corporate adoption, like Metaplanet's, is a long-term bullish trend, but comes with risks for the companies involved. When large firms add Bitcoin to their balance sheets, it can boost confidence, but it also exposes them to crypto's volatility. Buying stock in a Bitcoin-heavy company isn't the same as owning Bitcoin. It's a different risk profile. You're exposed to both the company's business performance and the price swings of Bitcoin itself. The altcoin market offers diversity, but also requires careful research and understanding of each project. Many altcoins promise innovation, but not all deliver real value or long-term potential. Not all cryptocurrencies are equal. Know what you're investing in. Take time to study the fundamentals, the team behind the project, and the real-world problems they aim to solve. Diversification can help, but only with due diligence. Spreading your investments across different assets can reduce risk, but only if you truly understand what you're holding. Above all, patience and a long-term view are essential in crypto's volatile landscape. Quick profits are tempting, but sustainable success comes from discipline and resilience. Today's calm is a chance to learn, observe, and prepare for the next move. Use quieter periods to refine your strategy, deepen your knowledge, and set clear investment goals. By understanding these forces, you'll be better equipped to navigate crypto's ups and downs. Stay curious, stay informed, and remember, in the world of crypto, knowledge is your greatest asset.